Russia and Ukraine are at a full-blown war, and the US is about to move to get Russian oil imports banned completely. More on that and its impact on the markets in this video. Hello and welcome to the Pine Street Capital YouTube channel, where we talk all things trading and investing. My name is Ron and I'm the managing partner of Pine Street Capital. I've been trading for over 7 years, and today I'm here to bring you some market analysis, which is brought to you by the World Series of Trading, the only place where you can make real money trading virtual funds. Now, before we get into this market analysis, I need to remind you that none of these videos constitute as financial advice or advice of any kind to take a position in any financial instrument. So let's get into it. Welcome to this market analysis for the 7th of March 2022. Now, I've been missing in action for about a week, a bit under the weather, but anyway, a lot has happened in the markets over the past couple of weeks, and there are a lot of factors that are driving markets to be really volatile at the moment. So for a trader, these are ideal conditions. Now, let's just summarize what's happened over the past couple of weeks. So over the past couple of weeks, Russia has invaded Ukraine. And because of this invasion of Ukraine, that led to a whole host of sanctions from the West. And that include things like some of the Russian banks being cut off. And finally, one thing that we were really afraid would happen would be that Russia would be cut off the SWIFT messaging system. Now, that's happened, and honestly speaking, it didn't lead to the kind of decline within markets that I was expecting. And maybe that's as a result of the fact that part of the move might have been priced in. But one thing that's really going on in the markets that's topical in the markets right now is the potential for a third round of talks between Russia and Ukraine about a potential ceasefire. Now, Russia actually didn't live up to a couple of those and actually continued to attack certain territories within Ukraine whereby they'd promised a ceasefire. So one thing that the UN and the US are discussing at the moment is the potential for more sanctions to be imposed on Russia. And this one is, well, I would say within the same realm of the whole SWIFT system banning that happened last week. And that sanction is a complete ban on Russian crude oil. Now, just to give you some perspective, Russia actually supplies half of the crude oil to NATO member nations, right? So this isn't child's play. And when you look at the impact that it's had on the markets going into today's open, crude oil actually jumped up 9% to levels that we haven't seen since 2008, right? But anyway, that's just a summary of what's gone on over the past couple of weeks, and we'll discuss that and the impact as we move into the charts. Now, this is the US 30 first market we always look at, and that is a gauge of the 30 largest companies within the US. Let me just make that full screen here. So that's the 30 largest companies within the US, and what's happened with this index over the past few weeks, as you can see, is we've just been bumbling along sideways. But however, if you take a zoom out, over the past week actually, but if you take a zoom out, we're actually in what looks like a downward trend, a longer term downward trend. But right now, for the moment, what we're monitoring is this sideways range. So any bounces, I think, would lead to a really good high risk reward ratio trade with a decent probability of success, right? So that's what I'm seeing in US 30, and that's obviously correlated with what's going on in the NASDAQ. NASDAQ has been sideways, and I think best risk reward ratio trade with a decent probability of profit is a short position on bounces, right? However, I definitely see this 13,137 level as the floor for whatever trade you may be looking to take within the competitions. Then we've got US 500, that is the S&P 500, the 500 largest companies in the US. Pretty much the same story, sideways range, and a short position presents a really good risk-reward ratio trade. However, if we do get the markets come up to this higher level over here, then that definitely presents a really good risk-reward ratio trade to go on the short side. So definitely short biased on all of these markets, obviously because of the pre-existing geopolitical tensions, right? Then next thing, the FTSE 100 has broken through this significant range, and we have actually broken into a downward trend. Now with the FTSE 100, I'd be looking to a shorter time frame to find shorts within this market. But we've actually gotten quite a reasonable bounce within this market in today's trading session, right? So any kind of weakness on a shorter time frame would definitely have me interested in a short position. Euro dollar. Now the euro dollar is very interesting because of what's gone on with central banks as a result of Russia and Ukraine. So before, central banks were in a situation whereby they were looking to increase interest rates because of demand pull inflation, right? And that demand pull inflation came as a result of the fact that we were starting to get some reopening after the pandemic, and because of that then drove up inflation because of more demand for goods, right? So that's what you know as demand push inflation, and central banks usually counter demand push inflation by using interest rates, right? They usually, in this current environment, they were looking to counter that demand pull inflation by essentially cutting interest rates, which would then put more pressure on purchasing by the consumer, purchasing and investment by consumers and companies, right? But unfortunately, we've entered a situation whereby one of the most pivotal commodities within the world is increasing in price rapidly, which is going to cause inflation. And that's the price of oil. Price of oil has increased as a result of a lot of Russian oil being quote unquote taken out of the market, right? I did mention earlier on that Russia actually supplies half of NATO member nations with their oil. Well, supplies half of NATO nations' oil. And because of that, that's taken a lot of the potential for sanctions to be imposed on Russian oil imports that can really impact the price and make it increase even more, causing inflation. But then this inflation is different from demand pull inflation. This is what we call cost push inflation. Now, cost push inflation is the bad kind of inflation, right? Surprise, surprise, economics is quite a complex animal, but there's a good type of inflation, which is demand pull inflation, and you can counter that with interest rates. However, we have cost push inflation, which is as a result of rising costs of, say, commodities, right? And this oil story is one thing that we're really worried about with the central banks. So could that maybe cause a pivot by particularly the European Central Bank, who are looking to increase interest rates within the third quarter of this year? Could that then push them further along? Well, and that's the reason why you're starting to see this strength in the US dollar, which is essentially weakness in the euro. Euro Swiss franc is actually currently trading at parity, which could cause some significant action by the Swiss National Bank. Okay, so that's one story we're really monitoring: central banks' reactions to what happens with this Ukraine-Russia situation. And the main factor I think central banks are going to be looking at is the price of oil and what its impact is going to be on economic growth and inflation, right? So moving on to euro dollar. With euro dollar, we are seeing some broad-based dollar strength. I don't expect this to stop anytime soon. However, if you're looking to play this, I think the best way to play it would be to short the euro on bounces, right? And I think the same thing applies to the pound. The pound, their central bank has actually moved faster than the European Central Bank, and they, in quick succession, actually increased interest rates. And I don't think the central bank really factored in the potential for a Russia-Ukraine war. So I definitely see the pound being hit hard as a result of this. So just like the euro, I'd be shorting any bounces, right? Dollar yen, this was an interesting one. I expected more of a safe haven bid in this one. But we've seen more sideways action. So obviously, I'd be looking to the top end of this range to be taking short positions, right? And bottom end of the range to be taking long positions. So we'll see how that story develops. Now, this is an interesting one. Gold has finally hit the $2,000 mark, right? And that's obviously because of the safe haven bid. We get war, people are looking for safety, and they look for safety in gold, right? So we've seen a rapid rise in gold over the past few trading sessions, and it actually hit $2,000 a couple times within this trading session. Does it sustain levels above $2,000? We'll have to wait and see whether it does, but I think the path of least resistance for gold is to the upside. Now, WTI, this is the big story for today. Now, with WTI, we have seen a huge bounce, right? And this was a really, really good risk reward trade in the morning after the market opened, because of the fact that we got this huge gap down with no real this huge gap up with no real follow through, right? So oil jumped up, and then it didn't really continue going up. So I'm guessing we're going to get a lot more selling, probably towards the 100 level. But one thing we're going to be monitoring is the headlines and whether or not the US actually goes forward with their potential ban on Russian oil imports, right? If that happens, then you can expect this price to go a lot higher. Some analysts expect oil to go as high as $150 and even beyond that. But that just goes to show that we are in almost uncharted territory with oil. So this can go a lot higher. However, I'd be monitoring the headlines. I think there's a very low probability that we get an outright ban on all Russian oil, particularly with the EU, because the EU is taking on a lot more economic risk by banning oil imports from Russia. Okay, so that's the oil story. Then Bitcoin, we are starting to see Bitcoin taper off a little bit from that time a couple weeks ago when we went above $40,000, right? So with Bitcoin, I definitely think it presents a decent risk reward ratio on a long position over here. However, I think the best risk reward ratio trade lies over here if we reach $35,000. $35,000, I'd be looking at a lower time frame to be looking for a long position in Bitcoin. However, for the moment, it's a decent trade, trading it to the upside from here. However, I think the most likely outcome is that we see more sideways action. Okay, and that's about it for this week. So we continue to monitor the headlines. Particularly, the main thing we're looking at is whether or not the world goes forward with banning Russian oil imports, right? So that's the story right now. We're also monitoring central banks as well. Central banks, less of a factor in terms of moving the markets in a major way. However, if you are trading euro, dollar, the pound, you definitely want to listen to central bank speak. Now, if you like this video, please smash the like button below and subscribe to our YouTube channel for more content just like it. And if you'd like to learn how we approach the markets, you can do so by joining the Professional Trading Masterclass course using the link in the description. But other than that, I'll see you in the next one.